House Republican leaders on Wednesday will propose keeping the top income tax rate for high levels of personal income, four people briefed on the planning said, a last-minute adjustment to their sweeping plan they hope to push into law by the end of the year. The details came during a briefing House Speaker Paul Ryan R., Wisconsin had Tuesday afternoon with conservative activists. House Republicans had planned to collapse the 7 existing income tax brackets into 3 brackets, lowering the top rate from 39.6% to 35%. But after weeks of internal deliberations, they decided to retain the 39.6% rate for very high levels of income, the 4 people who attended the meeting said. The tax rate could be applied to income at levels such as $750,000 or $1 million, though the details remained in flux. The move signals Republicans are eager to avoid the impression their plan is biased to rewarding the very rich, and pull along the votes of moderate Republicans concerned about the plan's impact on inequality. Currently, families pay the 39.6% rate on income above $470,700, so the proposal would still lower taxes for people for anyone who earns above the lower amount. Grover Norquist, president of Americans for Tax Reform, is one of the people who confirmed the 39.6% rate would remain for the highest income. Overall, I'm very happy with the bill, said Adam Brandon, chief executive of FreedomWorks, who attended the Ryan briefing. My read is that everyone is going to be seeing a tax cut. The House Republican plan will also eliminate the estate tax, though it will be phased out over a number of years. Senate Republicans are wavering on this idea and could retain the estate tax. The proposed changes are part of the House Republicans' ambitious and fraught legislative effort to rewrite the tax code, as they reveal, for the first time, details of their tightly held proposal that President Trump hopes to soon sign into law. House Ways and Means Committee Chairman Kevin Brady R., Texas will introduce a bill that aims to slash corporate tax rates, simplify taxes for individuals and families, and lure the foreign operations of multinational firms back to the United States with both incentives and penalties. It will be the biggest tax event in the history of our country, Trump promised on Tuesday during a meeting with business trade groups at the White House, a claim he has made repeatedly but is nearly impossible to validate. The implications of the changes envisioned by GOP leaders could be sweeping, but numerous aspects remain uncertain. House Majority Leader Kevin McCarthy R., California said Tuesday that Brady's tax plan would lower the corporate tax rate from 35 to 20%, though the people attending the meeting with Ryan said there were some budgetary issues with this, and it's possible they might have to phase out this reduction after a number of years if the impact on the deficit is too severe. Thousands of other companies, meanwhile, which pay their taxes through the individual income tax code, would see their rates lowered on top income from 39.6% to 25%. The new proposal is expected to include a new minimum tax that U.S. companies will be required to pay on certain foreign earnings as a way to prevent them from moving U.S. operations to low-tax countries. And businesses are watching carefully on how the House bill deals with U.S. companies that produce goods overseas and then sell it back into the U.S., as tougher tax rules for these companies could hit pharmaceutical companies particularly hard. The House GOP plan will also allow companies to immediately expense capital investments, such as new equipment, for 5 years, but cut back the ability to deduct interest payments. Precise details of how these changes would work could not be learned. Many businesses and the wealthy are expected to be the biggest beneficiaries, according to initial versions of the plan, while the impact on many in the middle class is disputed and less clear. The proposal would roughly double the standard deduction that many Americans can claim to exempt a portion of their income from taxation, but it would also eliminate the personal exemption, which tends to benefit families with multiple children. But the tax plan is expected to expand the child tax credit, something Ivanka Trump has said will help working families. Retaining the top tax rate for the highest levels of personal income achieves two White House objectives. They want to try and retain as much revenue as they can in order to prevent the changes from adding too much to the deficit. They are also concerned about designing a tax bill that gives too many benefits to the wealthy, as much of the changes would already disproportionately benefit those with the highest levels of income. The House GOP plan will allow Americans to deduct the property taxes they pay from their income but prohibit, for the first time, America